You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome back to the show, everyone. It is Wednesday. Well, I'll have to tell you, it's actually Tuesday because we always record this show a day ahead of time. And so we don't know what the election result is, but I've got Zulfi Ali here from Valerity Wealth. Zulfi, how are you doing?
I'm doing pretty good.
Yeah.
On election day, all things considered, yeah.
Yeah, it is right now. It's about 5 p.m. Eastern time. I don't know. Have you heard anything? When is they start closing? Don't they start closing pretty soon? Or
it's state by state. You'll start seeing, I think, some of the East Coast, voting booths close. I think around 7, 8, something like that. Some of them go pretty late. I think there's a few states that might have like midnight or something like that. So it's a mix. Listen, I don't think I'd be surprised if this is resolved even when investors are listening to this podcast on sometime Wednesday or, I would guess best case here is like, at least kind of Thursday before everything settles out. And there might be some direction, but then I also assume that there's going to be a lot of contesting and recounting and all of that stuff. So, at the end of the day, it may take a bit longer than that even.
So that's what you think. You think it's going to be close. I
actually do think it'll be very close. Yeah.
So I interviewed Jim Rickards yesterday. I don't know if you know who he is. He's an interesting character, really smart guy. He's written a bunch of New York Times bestsellers. Used to work for the CIA, and he was a part of long-term capital management. This guy's been around for a long time. Advises like the government. In the last year or so, he's sort of gotten, I think, more political. He's actually been on like Steve Bannon's War Room podcast several times and all that. Okay. One thing about Rickards in 2016 had predicted a Trump victory on the day of the election. Nobody really thought that was going to happen, but he has this Bayesian, thing that he uses to make decisions, and he basically called it, and he was right. Anyway, he believes it's going to be a landslide. He doesn't think it's going to be close. He thinks a Trump victory. He thinks it is, and I don't know. We'll see. If I have to, okay, so we wagered last time on the 50 basis points versus 25 basis points on the Fed cut on rates. Where's your money on this one?
All right, so this is
not
purely
political. Not political. I'm just talking about
what is your estimate?
Yeah.
I think Harris is going to edge it out. The reason is that I think that her supporters or her voters are much more concentrated in high propensity voters. So the people that come out and in a very high percentage likelihood will actually participate and vote. And I think as long as she gets
wait a second though, because you got young people there too, right? Young people don't vote.
Yeah, but she's not relying as much on the young people. In fact, you've got a fair amount of young men that are expected to vote for Trump. Right. At the end of the day, a lot of the bro vote is going to Trump, and so I think that's my point. Of the young people, would you assume that young men or young women are more likely to vote? What would be your guess?
In this situation, I might even go with the young men.
Really, because they're excited, just because they're incentivized. Yeah.
Listen, I think this is there's a shadow kind of world here that's outside of the ballots or the polling, I should say.
Yeah.
And one thing that I have noticed is that people who in 2016 or even 2020 would never have admitted to being to voting for Trump are very open about voting for Trump now. And we're not even just talking about, remember what a big deal it was in 2016 when Peter Thiel came out at the Republican. I mean, now you've got a good chunk of Silicon Valley.
Yeah.
I mean, including Elon Musk and and everybody who's very
and
nobody's
Horowitz,
hiding.
I mean,
Nobody's hiding it. Nobody's hiding it. So that to me, and then on top of that, there's still a bunch of people who I know personally who are who would never admit that they would vote for Donald Trump because of any number of the the other issues. I mean, he's obviously a controversial figure, whatever, but they look at it as a choice between somebody whose policies they can deal with, lower taxes, smaller government, or Kamala Harris, who, I mean, she's got the most liberal track record in Senate, right? I mean, so some people are looking at this. They may not admit it, but there is an entire cohort of individuals who are out there ready to vote because they're concerned about the economy. And if you ever go back to the whole James Carville thing in the Clinton election days, remember what he say? The economy's stupid, right? Well,
it's the economy stupid. Yep, that's right.
Right, and you've got this inflation says people are hurting. There's no doubt about it. So I think that I don't know if it's going to be a landslide, but I predict a Trump victory, and I don't think it's going to be something that is going to take days. But that's the wager. Yeah, that's the wager. Yeah, that
is the wager. I think it's going to be a slim margin. Harris, you think it's going to be more than a slim margin?
Yeah, I think it'll be pretty clear. I think it'll be a clear victory for Trump. Okay. Anyway, so let's move on with the show here. And what did you think? Okay, so we talked about gold last week a little bit more. Could you tell where my biases were there?
Well, I mean, it's clear you're not a gold bug.
I mean, I wish I owned gold in the last year or two, but I mean,
well, that's it though, right? I mean, it's really the last couple of years that it's done really well. In fact, it's kind of, when mid-2022, when inflation started picking up globally, that's when we really started to see that huge run up in the price of gold, and so it's up almost 70% over the last couple of years. But it's not always the case, right? That gold is a outstanding performer in terms of an investment. In fact, if you would have bought gold in, let's say, mid 2011, when it was at 1,800 per ounce, you would have gone 9 years holding that gold and had to wait till mid 2020 just to break even on that price. And that's not including, obviously, the things you talked about, which is the cost of holding on to gold, which can be a negative drag on that position as well. So
it's funny that you say that, because that's about when I last owned gold. Because when I first started podcasting, and it was probably like, I don't know, 2015, 16, whatever. I started listening, and I was like listening to all the zombie apocalypse people talking about gold, and so I bought gold, and then like 3 years later, it was the same price. I was like, screw this, I'm out.
Yeah.
So.
Yeah. Listen, I think there's still a place for gold in a diversified portfolio. People that are looking for a variety of ways to hedge inflation. Well, gold can be one of the elements to use to do that, right? Because there's times when gold might be performing well, when the real estate market is not performing well, that sort of thing. But it shouldn't be something that's a very large part of your portfolio. So I think you gotta keep it within reason. I'm not that fixated on whether it's physical versus ETFs. Myself, I would probably just go with the ease of investing in an ETF, just because that's who I am. But there's plenty of people that like to have gold necklaces and sleep with gold under their pillows and what have you. So to each his own at that.
Yeah. No, it's all good. I mean, my own feeling is that, okay, no, there was a big run up in the last year or two, but if you're looking at gold as an inflation hedge, to me, you're much better off with like unleveraged real estate, right? Because gold, I mean, you're not leveraging it, and you're just waiting for the value to go up. And at least if you have unleveraged real estate, then it'll throw off money, and you'll be able to pay the bills, and you watch it go up in price. So, people often say, well, with real estate, of course, you got these fluctuations, and, look at what happened in the last couple of years, and that's all true, but it's not because of the real estate, it's because of the debt.
Yeah. The only caveat that I would put to that, Buck, is that because the markets, the real estate markets are driven by debt. Even if you purchase your real estate without debt, the valuation has an implied, debt environment in it. So you could end up buying it without debt in an environment where the valuations are high, the interest rate environment kicks up, debt becomes expensive, the value of your real estate can suffer as that. So you can lose that. And that's exactly the situation where actually gold can do just fine, right? You have nothing on it. So again, I think,
but if you look over a long period of time, though, which, people who are buying physical gold do not intend on flipping it, right? They're holding it for years and
Correct.
years and years.
Yeah. Typically generational.
Yeah, generations. That's what I'm kind of getting at. If you hold on to real estate for generations, anyway. But that's kind of my take on it. So,
no, I'm with you. And the fact that, that real estate's providing some nice cash flow along the way. I mean, there's nothing better than that. So, and, a variety of other benefits too, but
I'm still looking for my monster box.
Missing monster box. Yeah.
I have it's somewhere in storage, which is not good because the whole idea was if you were in a zombie apocalypse, you'd be able to use your silver coins, and mine's stuck in in storage somewhere and probably being guarded by zombies by that point. I won't be able to get to it.
I can just see you. Yeah, when the zombie apocalypse hits, you're out there hunting for your box.
Right, because only the zombies only take silver coins. They only take silver coins. So
that's right.
Well, okay. So now that we've totally mocked the precious metals, and of course I'm going to get hate mail because I have some gold bugs, and that's okay. I mean, it's all good fun. It's all good fun here. Okay.
Oh, so, by the way, I think the tax you guys talked about the tax. I think it is as you mentioned, it is taxed as a collectible, right? So you don't, and it's the same for all precious metals. So gold, silver, other precious metals. They don't qualify for that kind of long-term capital gains rates that you apply to securities.
Is that the ETF too? Is it?
No, ETF is a security, so you would have a different treatment of that. But physical gold, you're going to get taxed at your marginal tax rate up to a cap of 28%. That's what I understand is the cap on precious metals.
So it's punitive.
It is punitive. But again, you said people are trading this stuff. They're keeping it for a very, very long time, generational pass down, all that kind of stuff. So.
Yeah. Well, okay. So I mean, that's another reason if you do want exposure to it, and you don't think that, and you're not worried. So here's the thing: is part of the argument or part of the messaging there was that, and what people say about physical gold versus the exchanges is that if shit really hits the fan, you can't really count on your the ETF or whatever. But the reality is that can you really count on a third party holding your gold at that point? I mean I don't think so. I don't think so. In fact, I would probably put my money on the ETF before a third party with a whole bunch of gold, and everybody needs their gold. Yeah. But anyway, that's my own take. But all right. Well, let's talk about the economy. Obviously, this is pre-election. Things could change a lot between now and even tomorrow. But let's start with this.
Well, funny you should say that because, even as of election day today, you've got, the equity markets just closed on all-time highs, right? So both the S&P and NASDAQ. So despite the fact that, we're facing, an uncertain outcome, not only for the White House, but the Senate, the House of Representatives, it really seems like the market's saying, don't care. Maybe another way to look at it is there is enough underlying strength in this economy that investors seem to be saying that, you know, it's gonna stay positive, and whoever comes in probably won't, you know, set a course for destroying the economy anytime in the near term. So hopefully that's a silver lining on whatever outcome is happening, happens, that the economy is got its engines on, all cylinders, and things seem to be going pretty well there. We had a week last week where, some of the large tech companies, the mega cap tech companies reported, companies like Microsoft, Meta, Alphabet, and so on, all showing really good growth, really good profitability. So, so that sent obviously.
Do you have a sense of how much of that is like AI driven?
Well, AI is just starting to peek through. So actually, it's not a whole lot AI driven right now. In fact, I think the one case that was a little different was Amazon, showing that they had some really good revenue driven from AI, and Microsoft as well, but the other ones not so clear just yet.
Well, Alphabet, which is Google, right?
Yeah.
And Google's big driver, I understand, is and continues to be YouTube. So YouTube's huge.
Yeah,
right?
I think they also had a really good cloud infrastructure performance as well, which historically that's been Amazon's kind of strength. So they obviously took some market share there. So, but what's amazing is the amount of money that these companies are spending on AI, right? On AI infrastructure, on chips, all that kind of stuff. Microsoft said they spent $20 billion just last quarter on AI related stuff. So
I saw what's his name? Maybe it was the guy who was is he the retired Google Cook? No, it was I can't remember.
Cook. Yeah, he's at Apple. Cook.
No, who's the Google guy? Anyway, Anyway, one of these guys was talking about how like the real play there was potentially like nuclear energy, because AI takes so much energy that the peripheral case here is to focus on where that energy is coming from. That's where the money is. Now, of course, uranium's been going up like crazy.
Uranium's been going up. There's a slew of nuclear energy related, stocks or companies that have also had a tremendous run over the last year. It's, some of the utilities, the public utilities have performed, really, really well on the assumption that, some of their business on the nuclear side is going to continue to grow, which was not the case, just a few years back. And then there's these companies that have what's known as small modular reactors, and those are performing quite well in the market as well. The market believes that when these large companies set up their data centers and their AI infrastructure, they're effectively going to have to bring their own power with them, bring their own generation, because it's going to tax the grid, the current grid in the state that it's in today. And I think there was even a deal that was blocked where Amazon was trying to buy some nuclear energy directly for one of its data centers, and that was blocked because the regulator said no, that energy needs to go to the public. Right. It's just going to drive up prices if it goes to the data center. So that is definitely an interesting space to watch, and how that develops.
All right. Well, let's see what else is going on here.
Well, I mean, the big thing that we've got is, there was a couple of economic data releases last week. So on Thursday, we had the Personal Consumption Expenditures Price Index, a PCE. Mm-hmm. So that's the one that the Fed likes rather than CPI. And the PCE came in showing that inflation was 2.1% year over year, which means you're pretty much at the Fed's target.
What was the last time?
PCE?
Yeah,
I think it was about 2.2 or 2.3. So it's just been steadily coming down.
Yeah.
Yeah. So this
is
has
a
been
PCE. Do they have the housing shelter?
It's not.
thing?
It's not as big a component as CPI. CPI has the bigger housing component. So there's a few differences here between PCE and CPI. But yeah. Anyway, so 2.1%. Like I said, it's a good story on the inflation front. And then at the same time, we saw there was another economic release on Friday of last week that showed that unemployment remained steady at 4.1%. So essentially, the October employment situation is the same from September. So you don't have a real big decrease in employment. So that seems to be holding steady, which is ideal, right? You've got inflation steady at right around 2%, just above, and you've got unemployment steady at around 4.1%. Those are pretty good places to be on both of those fronts. So, when the Fed is announcing its next rate action, which is scheduled for November 7th, so a couple days from now, there's really not a lot of reason for the Fed to kind of veer off its rate cutting plan. So it wants to do what it can to sustain where we are today in the economy: low inflation, high employment. And so, I expect the 25 basis point reduction is going to stick in place, and we'll be looking for the December cuts as well, probably 25 basis points.
Well, okay, sounds good. And then of course we have the treasuries, right?
Yeah, treasuries haven't moved that much since we talked last week. So we moved. They had moved over the previous few months, where the yields have been increasing, but the 10-year still at 4.3% yield, 5 years at 4.2, so slightly ticked up from last week, but it seems to be holding steady now. I'm surprised on Bitcoin that is only at 69,000. I thought if the odds are that Trump's going to win, that would have rallied more.
Well, I don't know that people have given it the odds that he's going to win, though, right? I mean, they've called it sort of a dead heat, right?
Yeah.
And, so I think that's probably where, as the night progresses, I guess we'll see.
That could be.
We'll see if those Bitcoin numbers. But I do believe that if the Trump victory is probably going to end up creating a bull run.
Yeah.
On Bitcoin. So we'll see what happens.
We will see.
All right. Well, one last question for you before we cut out. Okay. And I know we often do products, but when you look at the market on the way it's on fire, right? Like all-time highs across the boards. What do you tell people? Do you tell people to buy into this or what?
I mean, listen, it's it really, it's a conversation that you have with investors in the context of where they're coming from, right? So if somebody was sitting on all cash and said, hey, what should I do? I'd say, well, you got to start deploying that capital. Even though, we've got some frothy markets, you got to start deploying that capital, and you need to start putting it in a variety of different asset classes, right? So if somebody is saying I'm pretty fully invested, I've got, some extra money that I want to invest, where do I want to invest? That's a little different kind of question, right? And so if they've already got a lot of exposure to the equity markets, would I say that you should keep putting money in the equity markets? No, but I think you should probably keep some decent exposure if you've already got it. So that, I think that's kind of the way I look at it. We've talked about,
obviously it depends on individuals and all that. And one of the ways that I think about this a little bit, though, is there's always something, or usually there's always something that's on sale, right?
Yeah.
And right now, I mean, I'm biased, of course, but real estate's on sale.
Yeah.
Compared to, definitely compared to equities.
Sure.
The stuff's still down. The stuff that's being sold is still being sold at 25% less than it was, 2 years ago.
Yeah.
And so if you look at it from what's on sale, that's what's on sale. I look at this and I have FOMO, right? Like when I'm looking at these tech stocks, I don't own any of that. Certainly own crypto, but I don't own tech stocks. But you just wonder. And then you have guys like, Warren Buffett are sitting on a bunch of cash, like he knows something is going to happen or something like that. And it's,
Yeah. No, I agree with you. And Buffett's been really good in the past about, moving to cash when he thinks the market is overheated. And then he's just waiting for his opportunity to go out shopping for whatever assets are on sale, on discount. And like you said, I mean, I do agree that there's this moment in time we're at right now because, you've got some good performing real estate properties that the current owner financed in a way that is not, tenable and has to sell. Those are the ones you pick up because those are performing assets. You can see the history of the performance, and you just got to fix the capital structure. I mean, that's a relatively safe play as far as I'm concerned. And the backdrop is good, right? Even if rates don't go down substantially, what you have is a economy that's still growing really well. You've got, housing shortages. You've got inability for people to buy their own homes. They have to rent. So there's just a whole kind of, set of conditions that I think will continue to support.
Well, and there's there's still really limited liquidity in this market, and eventually it's going to change, and there is going to be a lot more money going into this market. And so I still think it's the smart, but of course I'm biased in general, but right now I still think of it as a, once in a cycle kind of opportunity.
Yeah,
so
I'm with you on that. I agree.
Anyway, all right. Well, I think that's good for today, and of course, we'll see how the wagers turn out next week. And so yeah. Until next week, we'll see you next week.
All right. Thanks. Bye-bye.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.